welcome again. My name is Lo Wai Tan, and you are watching the show live. This is Your Money and Your Mindset. I'm your host, and each week, as you know, we talk about all sorts of interesting things to do with wealth creation, to do with your mindset, and how you think about what you consider to be safe investments, or what the mainstream media tells you will be safe investments. So welcome to you, all you folks out there watching. Stickum Blog TV, Real Coaching Radio TV Network, Receiver Internet Radio, Radio Roku, New Media Radio, and our partner Stitcher. You're watching this on your phone, aren't you? Okay, folks, we've got an interesting show today, and we've got an exciting show today, and we've got one that I think you should pay attention to because it's highly relevant to how your financial future pans out. Okay? So pay attention and have pen and paper handy because there is something that you might want to write down in terms of a website you want to go to. It's important. So today my guest is Mr. Lee Chapman of SA Gold Traders, the resident gold expert that I talk to when I need the lowdown on what is happening in the precious metals sphere in the market, especially after the US presidential elections. As you know, the race was won, and there's another 4-year term for Mr. Obama. And what I'd like to know from Lee is the relevance of that particular event. Now, I don't think because you're not in America, for you people elsewhere, that it doesn't affect you. It will. We're talking about a global economy now. It's no longer a country. It will affect everybody. So it affects what happens in America, what happens in Europe, what happens in China, in terms of the economy and the politics, of course, will have a bearing on people as far away as Australia. Yes, you too, folks. So without further ado, I'm going to say hello to Mr. Lee Chapman. How are you today, Lee?
Very good. Thanks for having me again.
And very interesting. So did you follow the elections with interest, even though you're an Australian? Okay.
Yes, I basically watched the elections live as they unfolded. I just realised that you are in America right now. You're actually Monday afternoon, and here it's Tuesday morning, so I'm speaking to you from the future, which is kind of weird. But when I was watching the elections unfold, as soon as I had a couple of clients wanted to buy bullion, and they thought the price was going to stay low, and I said, no, it looks like a bum is going to get in. You want to buy some gold right now. And as soon as it was announced, the price of gold went up by $6.
$6 just like that?
$6 as soon as it was announced.
So what was it in terms of US dollars per ounce? Because that's the way gold gets...
US dollars per ounce. So, well, it's Australian dollars are worth more at the moment than the US dollar, which I know a lot of you Americans don't like the sound of, but our dollar is $1.3, $1.4 at the time, so US standards it went up by about $7.
Wow.
Yeah,
just
about
like
$7 US, about $6 Australian.
Wow, so that is sort of a significant, I guess, a response from the market to the person who got into the White House. Obviously, there's long-term ramifications, but we won't go there right now. We're more interested in how, let's say, if somebody's decided that they want to, in terms of wealth creation, they have gone outside the mainstream that tells you to always buy shares or investment properties, which is the standard way most people create their wealth. I'm not saying it's wrong, but I'm saying that there's a right time for a right investment strategy, yes?
Yes.
Now, so we come to this thing called precious metals, and we're talking about the actual physical item.
Correct.
Before we do, I want you to tell our viewers the difference between the actual having a bar of gold in your hand versus having a piece of paper called the exchange traded fund, or EFT, for gold and silver. What is the difference?
Okay, I'll dumb it down really simply. The difference between physical and an EFT, or exchange traded funds, is exactly the same as if you go to a casino and swap your $20 bill for a chip. They're giving you a representative of your money or your gold, and you're hoping that the casino, at the end of the night, that you can go and exchange that chip back to a dollar note. Now, that's the difference between physical, is it's still physical in your hand, you can change it straight away, and the other one, it's a representative. It's not necessarily the physical thing, it's a representative of what they're trying to sell you.
Okay, but more importantly, what I'm interested in terms of the EFTs is the fact that it's millions and millions of dollars of gold and silver supposedly traded.
Yes, uh, you're basically taking a bet with your broker that silver is going to be held at a certain price, and if you win, well, you make a bit of money. If you lose against that bet, you've got to pay more money to stay in the game. That's how brokerage and EFTs work. And if you read the fine print on your certificate that you get, it doesn't necessarily say you're going to get back physical silver, or say you'll get back fiat US currency, US dollars, which are dropping in value.
Okay, so that's a really important point. So when you go in an exchange traded fund, when you go back to that piece of paper that says I should be able to swap this for 10 ounces of silver, there is no guarantee that you will get your 10 ounces?
Correct. If you read the bottom of it, it says payable in whatever currency they wish. So if you buy an EFT in the UK, it'd be in pound sterling. If you bought one in America, it'd be in US dollars, because they don't there's not the physical silver around there for them to pay you in physical silver. That's why a lot more people are buying physical silver, because they don't trust certificates.
Okay, so certificates is as good as saying it's based on my word as the broker or the seller, that when you come to exchange it for your real physical silver, I will be able to come up with that 10 ounces.
Correct.
And you're assuming that I will.
That's right. But a lot of people are finding they don't distrust of certificates, that there's just not the silver there to back it.
That's interesting. So really, from what I understand, then there's more being traded in the paper market than there is physical silver. Don't you think it's a bit naughty?
It is. I mean, if anyone else tried to do that, you'd be busted for fraud. But unfortunately, it's a part of the whole monetary system to keep silver and gold down, so they can make more money with exchange traded funds and stocks and shares. If certificates did not exist and people only traded in physical silver, the price of a physical 1 ounce lump of silver would be somewhere around the $300 mark.
And what is it at the moment?
Just over $30 US. About 31 US, I think it is this morning.
So it's $31 an ounce, but yet if they took away the EFTs and had silver revalued, you're looking at, did you say $300?
Mm.
That's phenomenal sort of a change. So my question is, how come we are all still thinking in terms of EFTs? How come people are sort of basically rushing towards EFTs?
Because the way the system works, that a broker will actually make a small percentage from an EFT, and that's all digital money. It's not real money. So if you buy an EFT, he might make 0.1%, but if he's doing thousands of trades a day, he's making a fair bit of money. So it's not in their interest to tell you about physical.
And even with financial advisors too, that's something I find rather interesting, that some financial advisors will not encourage people to buy gold and silver, but to buy managed funds.
Right. Exactly. The biggest piece of advice I can give is, if you're taking advice from a financial advisor, find out what they're doing with their money, not necessarily listening to what they should do with your money.
That's an interesting one. So question the financial advisor.
Exactly.
Mm.
And if they're not wealthy, don't take advice from them. That sounds a bit hard, but I've come from a very poor background, and I've been stung very many times, and I just, it's the way my mind thinks. I was given some advice a long time ago that only take advice from people that are going where you want to go. And then you can take that into marriage, finances, sporting career, whatever you want to do. Take advice from those people that have made it, not those that think they have.
Okay, so this is actually going to be, we're coming into the mindset area, so we're just segueing. All right, folks, we just need to get this clear, because we normally take advice from people we trust, people we look up to, people who are authority figures in our lives. So as kids, we listen to our parents, we listen to our teachers, we listen to our pastor, so to speak, or a figure that we think is an authority figure. But you're saying they are not necessarily the right people to go to for financial advice based on their own circumstances.
Correct.
So if they don't, they penny pinch and they are short of money all the time, they are hardly the people you want to go to for financial advice.
Correct.
Okay, so in your circumstances, when you grew up, you said life and times were pretty hard. What was the message you got?
The message I was brought up with that you worked hard, you got money, you put it in the bank, and when you retired, everything was fine. Reality was I was working a long job, getting poorly paid. My boss was very wealthy, and when I worked out how much money he was making out of me, I was ropeable. But then I realised that I was a product of the system that produced employees, not a product of the system that produced wealthy or business owners. Because unfortunately, society needs more workers, so that's what the system produces. So to become wealthy, you've got to get out of that employee mindset and look at finance and money through different eyes, and look at through a wealthy and business owner mindset. And then you'll change.
Okay, so you swap from being an employee to becoming a business owner / investor. Okay, so you have chosen actually a niche that is unusual. Most business owners tend to put their money back into the stock market, equities, or into investment properties, which apparently has been the way that a lot of people have become financially independent. You're actually going into an area that very few people know about, or it hasn't appeared on mainstream media, let's put it that way, okay? And not many people are aware, and there seems to be a very polarizing kind of effect on people. They either love it or they think it's the worst thing you could do. I mean, that's pretty critical for somebody trying to create wealth. So how come you have put your lot into precious metals?
I guess it wasn't until I started doing some digging and realised that the old idea of putting your money in the bank and earning interest, okay, was going to be the way to go. The more digging I did, I realised how the monetary system works, that putting your money in a bank isn't necessarily going to make you wealthy, or putting it into a house. The quickest way to make money is business first, stocks and shares, and property last. Yet the banks and the mainstream tell you to buy a house first and make money on your house, but the problem with that is it's too slow. It's a long-term thing, and the banks actually make more money out of you owning a home. So whatever the banks and mainstream tell you, you have to look at why are they telling you that. It's not for your benefit, it's for theirs.
Okay, all you bankers out there,
I know you'd probably just say, oh no, they're up to my secret, they know what I'm doing. But that's it in a nutshell.
All right, so back to you choosing precious metals because of your is that because of your background in the jewellery business?
Yeah, pretty much. I mean, my father was into jewellery and my grandfather, so I knew a fair bit about precious metals. And when I saw the price going up, I just did some digging and realised that it's just because of the printing of money that's making things go up. Not necessarily there's any more or less gold out there. It's just there's more money chasing the same commodities, and that whether that be fuel, it's just food, everything's going up. It's because there's more dollars out there chasing the same commodities. So
basically it's inflation of the currency, yeah. Right? Now, in that case, in terms of somebody who says, okay, what you're saying is interesting and I would like to pursue it further, you've actually written a primer, so to speak, for people who want to do this and do it in a way that they don't get fleeced.
Exactly. It's nearly completed. It's not up on my website yet, but it's nearly completed. But basically, I've written the book
called
How to Make Money in Business and Bullion. It's basically written in such a way that it's just really low tech. It's very easy for you to understand. From that, you can build into more technical stuff. There's more than enough books out there with charts and so forth. This is designed to give you the basics, and you can pass it on to a friend, so you don't have to try to explain it to them. That's pretty much it. So it gives you an idea how to change your mindset, where I came from, how you can relate to that in your situation, teaches you how to work out the inflation rate, the real inflation rate in your area, and work out how and if you are actually making money where you are or not. And from my calculations, when I did it, I realised I was going backwards.
Yeah, because
I had to change.
In America, your interest rate is like, or the reserve has decided the interest rate is like 0.5%, right?
Correct.
Yeah, so your money being put in there is hardly earning anything if you're putting your money into cash.
Right. Here in Australia, I worked out the federal inflation rate is 1.2%, which sounds great in theory, but when you work out what petrol was or fuel was 10 years ago and what it is today, you're looking at the inflation rate is really 11.5%, real inflation rate. Because the government can manipulate, well, we'll build into unemployment, we'll build in how much we owe and so forth and so on, but that doesn't matter. It's what you pay at the pump, what you pay for your food, what you pay for education is the real inflation rate. So at the moment here in Australia, I calculate it's about 11.5%. So if you're only getting 5% in your bank on a good day and the inflation rate is 11.5%, you're going backwards. Your money's losing its power. If you had $100,000 in the bank, after 10 years, you'd lose 64% of its buying power. It's the same as buying $38,000 today. That's how much $100,000 would lose in 10 years.
That's very depressing, Lee.
It is. It's depressing, but the mainstream, the banks tell you to keep it in their bank because they can re-loan against that using it as their collateral from your money to loan out to some other poor person to suck into the system. Whereas precious metals has gone up on average 28% a year in gold over the last 10 years. So logic would say if I'm making 28% on precious metals, and inflation rate is 11.5%, I'm actually 17% out in front if I invest in precious metals rather than have the same $100,000 in a bank. If that makes sense. And that is all in my book.
In that book. Okay, so folks, you better get to pen and paper so you can write down the website so that Lee can get you your book when you put in your name and your email address. You just said something that's interesting, investing in precious metals. Now, a lot of people, I'll play the devil's advocate now. One of arguably the world's most successful investors is Warren Buffett.
Yes.
Right, and Warren Buffett has been known and has stated categorically.
He's not a big fan of precious metals.
He's not a big fan, and he doesn't understand. He doesn't see how it can be an investment class. Okay, so he says it's a barbarous relic, or Charlie Munger said that's his partner, and don't invest. That's not the big thing. So what is your response to somebody's?
That's interesting. I did a little bit of digging, and I found out that 14 years ago, that Warren Buffett actually took over a company or an investment bank called Solomon Brothers that were going out. Now he saved this bank shortly after he took over that bank. Okay. They brought 129 million ounces of silver. So to say that Warren Buffett and Berkshire Hathaway haven't, he's not a big fan, he brought 129 million ounces of silver, but that is only 2% of their total wealth of Berkshire Hathaway. So he's right, he's not a big fan of it, but he still made money out of it. And that was 10 years ago, or just over 10 years ago. 14 years ago.
Okay, what would have the price of silver been then?
14 years ago, about close to about $14 or $15 an ounce.
And now it is over $30 an ounce.
Yeah.
So doubled. And
so he did sell it and make some money. His argument is it doesn't make cash flow. Well, it depends on how you use it. If you bought some precious metal, keep it for 6 months, sell a portion of it, and with the money that you make, you buy more precious metal with it. It's not making you a cash flow, but you're actually increasing your wealth. Whereas Warren Buffett is all about cash flow.
Okay, which is a good strategy if you're using it as an investor who doesn't want to go to a job to be able to earn money. Okay. However, you're saying that buying precious metals in a way that allows you to grow your wealth but also get cash flow.
So you can use it. I myself have, we have a self-managed super fund, or a 401k as you call it in the States. From that I trade silver from that. About 99% of it is silver. We buy it just over spot and we sell it a bit higher. We make the difference, and with that we buy put some into the business, and we also buy it to make more silver. That's what we do. So the average person can do exactly the same thing.
Okay, so you can now just explain what is buy it at spot, please.
Spot. Spot price. I buy it at spot. That's what most bullion buyers do. Some buy it a tiny bit below spot. Some buy it maybe a smidge over spot. It depends if they've got orders to fill, and really what they want to do with that. If they've got large orders to fill and they're willing to take a bit less, they'll buy it a bit over spot, and they'll just make a little bit less money.
Okay, so spot is basically the price on the day?
The spot is basically the difference between what people want to buy it and what people want to sell it for on the stock exchange,
right,
without getting too technical.
Right, so, and this is commonly available information, yes?
Yes.
Okay, so there's no hidden, like, somebody decides and they just give you a number. Kind of like if you want to buy a house, the vendor can just go, I'm going to put out, $350,000 for this house, and they can decide. Whereas this spot is decided by the market.
Correct.
Okay, so that's one way of looking at it. And in your book, you actually go through you've briefly touched on it. So in your book, you actually talk about the actual steps that a person has to take to buy.
Yes.
Okay.
So silver and gold is more liquid than anything else. If you have physical, you can go to a bullion buyer and just sell it straight over the counter. If you have exchange traded funds, you've got to ring up your broker, they've got to okay it, it takes a bit of time to go into your funds, it takes a bit of time to sell it. Same as a house, you can't just sell a house straight away. You've got to go through a conveyancer, you have to go through an agent, it takes time for all the documents to go through. It's not as liquid as having physical precious metal.
And also, if you have a house that's an investment property, as you sell it in Australia, there's a thing called capital gains tax.
Yes, you got to pay tax on it.
Yes, so there's lots of, I guess, pluses and minuses, but for me, it sounds like precious metals is just really as simple as going to buy a loaf of bread at the grocery store.
Here in Australia, you don't need a special license. You don't need it. You just come in and pay for it over the counter and walk out the door with it.
And nobody's the wiser.
Yep.
Okay. There's something else I want to ask you in terms of people who are interested in now that it's piqued your interest, folks. I hope it has, as another asset class that you might want to consider, is the fact that I've read that sometimes leaving it in safe deposit boxes may or may not be the best option. It depends on how paranoid you are, right?
Yes. Depends on your situation and where you live. If you keep it in a safe deposit box at the bank and there is a bank run or a bank holiday, I don't know what they call it, a holiday when they're closed, but anyway, you won't be able to get hold of your physical gold and silver. If you hold it offshore in an account somewhere, if the internet goes down or the financial collapse, when it does happen, there'll be so much chaos, people trying to phone up, you won't be able to get in contact with the overseas vault to sell your bullion anyway. So I'm a big fan of having the physical stuff somewhere close to you that you can get hold of it in a safe somewhere, but you can put it in a safe deposit box, but I'd do it as a last option. I wouldn't do it as a first option. Okay,
because some people are actually fearful of the fact that if they get burgled, so you'd say that you wouldn't put it in your house, first of all, that would be a bit daft. You'd actually have it somewhere else, but not many people would know about it, basically.
That's right. There's more than enough places where you can have a safe, and there are more than enough places that sell decent safes. And if someone's going to break into your house, they're only going to be in there to try and get a few rings and maybe a wallet. They're not going to go in with Jimmy bars and try and break out a safe because they want to get in and out as soon as possible. So that's my take on it.
Right, because this is a thing called counterparty risk, that if I leave it with somebody else, they might run off with it. Yes, and just don't dismiss this, folks, and discount this as somebody who's paranoid who's talking about that. If I were you, I'd go up and go to Google and look up MF Global. Okay, MF Global was supposedly an investment institution that was safe, supposedly, and they went broke. This is in America. And the people who had, among other things, money and gold and silver, suddenly found that it was gone. And this is supposed to be putting your money with investment, I guess, gurus who knew what they were going on about. Now, please don't say it can't happen, because it did happen, and it did happen a couple of years ago. And the person who was running it was a guy called John Corzine, and he was the governor of New Jersey, right? And funnily enough, their gold and silver ended up in J.P. Morgan's books. So I'll leave it there for you to look up and chase it up. And you make up your own mind about how safe a safe is in supposedly an investment institution or bank.
Correct.
Right. So it's the same thing like people said hyperinflation in Germany, in the Weimar Germany before the Second World War. You know, these are financial institutions supposedly backed by the government. How safe was that?
That's right. It's the money that we use every day, the cash money, the folding type of money, is a decree by your government that it's actually worth something. Now, here in Australia, the Gillard government has upped our debt ceiling to $280 billion, which probably compared to other countries is not a lot. I mean, we've only got the population in New York here in Australia. But I know for a fact that when that money starts trickling through, that our dollars, there'll be more of them out there. So that means that our inflation is going up. So I can know that 6 months from now, gold to buy here in Australia is going to be more expensive. It's just going to happen. It's like the sun's going to come up tomorrow. So it will happen. So it's by government decree. So that's completely out of my control.
So just translating it to the debt ceiling that you have in America at the moment, was it like $14 trillion or something?
Crazy. I can't even count that high.
Yeah, exactly. Just too many zeros before you get to the decimal point. So if you can't wrap your brain around that, just imagine, okay, what it's going to do to your nest egg, your wealth creation strategies, and basically how am I going to outlive my money if you're retiring, if you're a baby boomer? Now, a lot of baby boomers, I know, have had to put off retirement simply because
their money's not making their investment's not making enough money because they've got it in cash, and they're only getting 0.5% or 1% interest, and it's not keeping up with inflation, and that is the problem. It's not keeping up with inflation.
Okay, so that's another thing that folks, I'd like you to look up inflation and the fact that inflation is going to happen whether you like it or not. The smart thing to do is, how do I protect myself and protect my wealth against inflation eating into it?
That's right. And the only asset class that's been outperforming inflation is precious metal.
So you heard it there. Okay, so now let's get to the point where somebody's interested enough to make the next step, and it's to purchase. First of all, like you say, you can go over to any bullion dealer and get your gold or silver. Now, what is there in terms of checks and balances to make sure that what they buy is real?
Is what it's, yeah.
And not just plated bricks.
Okay. I'd stay off of eBay, okay, because there's a lot of scams, there's a lot of fakes on eBay. So I'd stay well clear of that. You want to go to a reputable bullion dealer, someone that's either backed by your local mint. If you're in North America, you want to probably go to the Royal Mint of Canada, the US Mint, and go to a dealer that is actually a distributor for those mints. Here in Australia, you have the Perth Mint, and they make a lot of coins for a lot of the Pacific and sort of Southern Hemisphere. And go in and actually see the bullion itself. You'll soon be able to tell if it's fake. It won't be the right weight, it won't be the correct diameter. You can do enough research on what sort of coin you want to purchase and the dimensions of that coin or bar. There has been some problems with fake bars in New York recently. They were somehow intercepted between when they were from the vault to the dealer. The FBI have caught up with those people. So,
and just put in context, apparently what happened was that they drilled out.
They literally got 10-ounce Swiss bars, cut the ends off, milled out the inside, and put a sleeve of tungsten in the inside, and then put another gold cap over the end. And they were very professionally done, but yeah, as a percentage of how many got done and how many gets traded around the world is a very, 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 very small percentage.
Okay, so just tell me again, for people who are looking at that, it's like, my question is, as somebody who's new to the business, isn't an ounce of silver an ounce of silver an ounce of silver? So why is there such a vast difference in the markup, if I can call it that?
It depends on the regions and local economies. Like for example, in India, the price of 1 ounce of gold can vary from one side of the country to the other because different regions have different taxes and all sorts of crazy stuff. Here in Australia, it's pretty much even right across the board. I think it's very similar in the US, but it seems that the countries that are a bit more unstable, the prices vary greatly across one region to the next.
Okay, so let's say talking to people in North America and Australia and places where relatively politically it's stable for the time being, that in fact, if you did your research online, a lot of these bullion dealers have their stocks and their prices online, isn't it?
Okay.
Yeah, and what I noticed too is that the prices will fluctuate and follow what the spot price is.
Yes. So in the markup should be equal to whatever the spot price is doing, should actually mirror it. It shouldn't be abnormally huge. It should pretty much stay parallel to whatever the spot price is.
Okay, so in a sense you can do your online shopping like everything else and compare prices.
Yes.
Okay, and how easy is it to get that? I mean, won't it get pinched between the person? Let's say you want to buy silver and the shop is in New York and you live in California.
Going with FedEx, they're very good. You'd be able to ship it from one side of the states to the other, and that wouldn't be a problem. We've done the same thing with FedEx, and yeah, it's not a great issue. So as long as you use a secure courier company
With insurance?
with insurance, it shouldn't be an issue.
Okay,